Thanks for staying with us. And this afternoon, government continues to face tough opposition to its debt exchange program as organized labor has declared its intention to embark on an indefinite strike from December 27. According to Secretary General of the Trades Union Congress, Dr. Yalban, the strike will be enforced until the government exempts pension funds from the planned debt exchange program. Listen.
You may recall that exactly 1 week ago, we said we were asking government to exempt us from the debt exchange program. We sent the letter and we told the whole world that if government doesn't do that, we will advise ourselves. Today, we are here to tell you the advice we have given to ourselves. Yes. And that advice is very simple. We have decided, all of us together, that because government has refused until today, by midday of today, to grant us our request that all pension funds, and we are not exempting anything, all pension funds must be exempted from the domestic debt exchange program. We have decided firmly that all workers of Ghana are going to strike on the 27th of December, and we will be on strike until our demand has been granted. And the demand is simple, that all pension funds must be exempted from the debt exchange program. And what it means is that all workers of Ghana should stay at home on the 27th of starting from 27th. Don't go to work. Stay at home. And we will stay at home until we hear publicly that government has exempted all pension funds from the domestic exchange program. That is straightforward and very simple. Between now and 27th, we have a few days to Christmas. From tomorrow, in fact, we have started today.
All right, so that was organized labor there pushing back on the debt exchange program, declaring a strike. Partner head of financial advisory at Deloitte Ghana, Yao joins us on Zoom to discuss this. Thank you for your time. So, Yao, can government implement the debt exchange program without touching pension funds?
Well, the answer is yes and no. It depends on what options we have on the table. And I think our debt sustainability program or our debt exchange program is not only looking at the domestic market, but we're also looking at the external market. So to the extent that there can be another option beyond our domestic exchange program, then I think government can consider exempting pension funds. But I think we have to put this conversation in context. And put it in context is to understand why the debt exchange program. The debt exchange program, first and foremost, is supposed to help us reduce our debt burden. Running at a rate where about almost 60% of your revenue that you generate is used to service interest is something that's unsustainable. And so for us to bring our debt to sustainable levels, we should all be prepared to make some sacrifice, including what we say in workers and pension funds and all. So there has to be some commitment to support the government and the program. Secondly is the fact that there has been some strong positive response, including the investor community, to us reaching a staff level agreement. And government has said over and over again that having this exchange program is part of what we are looking at, reaching a complete IMF program, if I may call it. So if we're going to have challenges or there's going to be some setback in our debt exchange program, then obviously that will affect our negotiation with the IMF and reaching board level approval and then getting some disbursement to support our initiatives. I think that's the problem or the challenge that I foresee.
So how does the government approach this pushback, seeing that it does not have time and a strike will further hurt the economy? We know the government is considering a review of some of the proposals in the debt exchange program and has extended the deadline to December 30 for institutional bondholders to sign onto the program.
Yeah, so I think the first response I would say is something that I guess is too late now. We should have started the stakeholder engagement even before the announcement. Now the announcement has been made, so we should continue with the stakeholder engagement, presenting options that are likely to be accepted by these stakeholders. And secondly, I see that there's some gap in terms of people appreciating or understanding what this whole debt exchange program is about and what its effect is. So we need to get the managers of these pension funds and then those who are in charge of pension funds to understand the implication of going for an option and also opting out. Because if you look at the debt exchange program and the memo that came out, there's an option for you to opt out. But if you opt out, it has an implication for those who are holding those funds. So I think we need to sit down with these holders of pension funds, agree on the most feasible. If, let's say, for a particular year, we can defer that, okay, from the year 2024, they'll be fully onboarded or brought on board the program. But year 2023 is what we call an assessment period. Then we defer for a year and allow these pension funds to work out their portfolio, work out the portfolio mix. So that if you work out the portfolio mix, what is going to happen is that those who are near retirement or those who are on retirement are not adversely affected by the impact. And those who have so many years to contribute into this pension fund are those who may probably take the haircut or probably be affected. But then because they are not vulnerable, they can be are the ones that whose portfolio can be moved into this debt exchange program. And then those who are on retirement or those who are close to retirement are exempted from it. So if we have a proper negotiation, there will be a way around this in a seamless manner, and then we avoid these strikes, because that also sends the wrong signal to the international community.
Yesterday, we received news of external debt restructuring with government suspending interest payments on some external debts. And today, we're hearing of the creation of the Ghana Eurobond Holders Representative Committee, which is pushing for good faith negotiations and warning against unilateral actions. Do you foresee any hurdles there too? And what should be the posture of government going into these negotiations?
I think it's the best thing that has happened. And I'm expecting domestic bondholders to do a similar thing. Come together, form a committee, appoint financial and legal advisors who will carry out your message. Because we've heard TUC, we've heard pension funds, we've heard various associations saying different things, and all of them say we are not ready to accept it. But you can see that on the international side, they know that reaching debt sustainability is important for you to get your debts back. If Ghana is unable to reach debt sustainability, then what you are even expecting to receive, you may not get it. So I think it's something that even domestic bondholders should replicate. Form a committee, appoint financial and legal advisors who will come to the table, negotiate with government in good faith, as they rightly said, in a transparent manner. And they've also outlined the principles and the basis for which they are coming to negotiation with. There are standard principles that you go through to do debt restructuring. And so you are supposed to go by those principles. And I think that will help if the domestic bondholders do a similar thing, replicate a similar thing. It would avoid the situation of us taking an intransigent position and also be flexible, going to the table, having an open mind, and ensuring that we reach some level of agreement rather than making it a lot complicated.
Well, final one, just as we're coming on the air, this news being reported by myjoyonline.com, the approval of a program for Ghana by the board of the International Monetary Fund is expected to come off at earliest in January 2023. That's according to Singapore-based Red Intelligence. It says the worst case scenario, the IMF board will happen latest March 2023. In its latest analysis on Ghana's debt restructuring, it said the staff level agreement is in good shape and the end December target looks realistic. I'm just wondering, looking at what we are seeing right now, if it really is realistic. Your thoughts on this latest analysis from Red Intelligence?
Yeah, so I think I'll put it in a very simple form for others to understand. When you're going through a program or a loan program or extended credit facility program, they are what we call CPs, condition precedent. And I'm sure in our negotiation with the IMF, there are CPs of condition precedent. And so some of the conditions that have been set out after the staff level agreement are supposed to be complied with before the board approves it. So if part of it is that we successfully go through a domestic exchange program and we are unable to go through it, then the expected or dates that have been set out may not be achieved. So I think all the conditions that have been set out towards achieving or reaching the board level approval should be accelerated, or we should work towards achieving that. And I'm happy the deadline for the domestic exchange program was extended, and it gives us the opportunity to do a lot more engagement, bring all the stakeholders on board. If there are other conditions that will have to be met before board level approval, we should also start working towards them, so that the more we engage, the more we are likely to reach a consensus and avoid intransigent positions that are going to be taken by other stakeholders.
All right, Yaolate, thank you so much. I appreciate your time with us. We will speak sometime soon. Thank you so much. Well, Finance Minister Ken Ofori-Atta is pushing for Parliament's approval of the 2023 budget estimate to help fast-track economic recovery and secure a program from the International Monetary Fund. The Finance Minister made the appeal when he addressed the country on the current state of the economy. All right, we'll bring you that and link up with our parliamentary correspondent, Kwawu Asante, when we have him on to get a view from Parliament on all of this. But banks wrote off 2.92 billion cedis as bad debt in the first 10 months of this year. That's according to Domestic Money Bank's income statement published by the Bank of Ghana. There's more in this report.
The bad debt, which was 66.8% more than the previous year, was as a result of loan losses, depreciation, among others. During the same period in 2021, 1.7 billion cedis was written off as bad loans. According to the Bank of Ghana, the banking industry's non-performing loan stock increased to 11.3 billion cedis in October 2022 from 8.4 billion cedis in October 2021. This was partly due to the revaluation of the foreign currency NPLs and deterioration in some domestic currency portfolios. But the banking industry's asset quality improved during the period under review. When adjusted for the fully provisioned loan loss, the industry's NPL ratio declined sharply from 6.2% to 3.9%. The decline in the NPL ratio was, however, due to higher growth in total loans relative to the NPL stock during the review period.
So we're going to go back to the story we wanted to bring you on the Finance Minister Ken Ofori-Atta pushing for Parliament's approval of the 2023 budget estimate to help fast-track economic recovery and secure a program from the International Monetary Fund. Let's listen to the Finance Minister when he spoke yesterday.
That is why we urge Parliament to support us in getting the appropriation bill for the 2023 fiscal year passed. We also urge Parliament to support, in particular, new revenue measures outlined in the 2023 budget, which aim to improve revenue mobilization. We cannot afford to repeat the mistakes of 2022. Our end game as a government has always been to achieve a Ghana beyond aid, a wealthy, inclusive, sustainable, empowered, and resilient society, a wiser Ghana. The necessary precondition for this is a stable macroeconomic environment. Viewed within that lens, restructuring our debt is only but a necessary part of our story. The ensuing years will focus on building an entrepreneurial and export-driven economy as we grow the economy to protect and create jobs, tackle inflation, and strengthen our currency. Importation of food should soon be a thing of the past. We cannot afford to lose this essence of forward momentum for our economy as we navigate towards stability, predictability, and growth. 2023 must be our comeback year, a year in which we put in place stronger foundations that will allow us to change our country for the better and in a way that is enduring, inclusive, and transformational. We all have a role to play, and I urge us all to work together with the government and support the various interventions being implemented to kickstart our recovery in a determined, bold, and courageous way. Above all, I urge us all to maintain an unshakable sense of optimism about Ghana in the
Now, many families who relish consuming chicken, especially during Christmas, may not be able to afford the delicacy as they did in past years. Customers have been advised to brace themselves to pay more for chicken this festive season, but poultry farmers are hardest hit because they are unable to stock their pens for the festivities as they used to. Love FM's Mona Lisa Frimpong looks at how the rising cost of poultry has resulted in low sales and increased losses among farmers.
The 25th of December, millions will celebrate Christmas. The festivities put smiles on the faces of poultry farmers as they record huge sales and profits. In previous years, 68-year-old Joseph Amwakunketia raised thousands of broilers and layers targeting the Christmas and New Year celebration. But this year, his 40,000 capacity bird farm is virtually empty. Few days before Christmas, he can count only 300 birds on his farm.
Can you imagine this? I'm buying maize, 50 kilograms of maize, about 210 Ghana cedis. 210. Concentrate. If I go in to buy 5%, 230, 300. Soya bean, 550. Madam, can you imagine? If I put all this in my times, I calculate everything. If for now I want to make 1 ton of feed, it's almost about 5,000 and something Ghana cedis.
Poultry farmers in the region are unhappy. They struggle with the exorbitant prices of maize, soybean and wheat to feed the birds. Last year, Mr. Nketia sold his layer birds at 30 Ghana cedis for a layer and 50 Ghana cedis for the broiler at the farm gates. Now, he has been compelled to increase the prices to 50 Ghana cedis for a healthy-looking layer and 70 Ghana cedis for a fattened broiler.
The spent layer, it should be from 60 to 70 cedis. Crate of eggs, depending upon the size, 50 cedis, 40 cedis, or 35, the last of 35. But you see, at times when you go down to the marketing centers, they rather add more. Because if you come to buy from here 60 cedis or 70 cedis, you can imagine over there, they will sell 100 Ghana cedis.
The countdown to Xmas has begun. A market survey across the business districts of Kumasi revealed layer birds are sold between 60 and 70 Ghana cedis. Broilers, on the other hand, ranges from 70 to 100 Ghana cedis. Traders price the fowls based on how fat and healthy they look.
Our boy is 70. It's nearly G60. You say, almost out to 2. They say 70 cedis.
Because they say, no born hiding. I almost see a best 2 months. It's almost a pajama dear. I buy high. Because Christmas and I saw Nipano to more.
The poultry value chain involves production, processing, packaging, storage, and retailing. Asafo, the hub of the packaging and storage of frozen meat, has less vibrancy as before. Cold store operator Awudu Razak says both imported and locally produced chicken are sold to them at high prices. Another trader, Joanna Techimensa, observed the purchasing power of her customers have reduced.
The problem is farmers and Casano regularly. Within send a week, Ghana area, weekday out in a bar. You sure say you problem.
That time na box we to meet 15 cedis and they 1.5 on. Yes, 1.5 and they 150. 340, 320.
Consumers who have been crisscrossing the markets for Christmas shopping, however, lamented the price increases. They will opt for other protein foods.
Yeah, mommy. Easy. Na sanse say in so cry ntimi to yem fa ne sa enam fie be ha. Ene ukwa 20 kra unya nam. Yes number ko ne sere 250 na mama nipa be 12. Ye betimi awe nam sere ba ko 250,000.
Little intervention from the government is collapsing many poultry businesses. Mr. Nketia, who is the Ashanti Regional Secretary of the Ghana National Poultry Farmers Association, has laid off most of his workers to enable him to stay in business.
When I was able to keep down about $40,000 under NDC regime, the Boris B, I employed 25 good, solid workers, of which I paid them. But can you imagine, madam? Nothing today.
All right, we want to take you to Parliament now. Earlier, we played a clip of the Finance Minister pushing for Parliament's approval of the 2023 budget estimates to fast-track economic recovery as the government works towards an IMF deal. We want to get a view from Parliament from our correspondent, Kwawu Asante. So, Kwawu, the Finance Minister saying, guys, you've got to speed this up because we really need to get the economy back on track. Let's not do what we did with the e-levy. Is he getting a listening ear?
So he's getting a listening ear in terms of the main budget lines. That is the allocations that have been made to the various ministries, departments, and agencies. So far, with just about 24 hours for Parliament to go on Christmas break, none of its revenue measures have been approved. We have the VAT rate increase. The VAT bill is yet to hit the floor, the amendment. The e-levy, which is set to be revised from 1.5% to 1%, and with a daily threshold of 100 cedis removed, is also yet to come to the floor. The removal of the benchmark values, that is also yet to come to the floor. The VAT, the Ghana Revenue Authority Amendment Bill is also yet to come to the floor. So the key revenue measures that the Finance Minister will be banking his hope on have not hit the floor. And our understanding is that it's because the numbers don't exist now. The minority have always insisted that these are revenue measures they cannot support and will kick against. And so with just 24 hours to go, that has not hit the floor. The expectation is that tomorrow, being the last day, the government side will lay these revenue measures, certificate of urgency, they will be taken as quickly as possible. But do the numbers exist?
Okay.
No. The minority have 136, the majority side have 137 plus an independent MP. But we know Sarah Josapo is not around. The calculus is something else. And so that has not been done yet.
We have just about 30 seconds. I'm reading from your reporting today that the tourism sector budget has been approved, but without the funds for the National Cathedral. Quick update on that.
Yeah, so the tourism ministry's budget is actually yet to be taken. It will be taken soon, but the understanding we have is that the 80 million cedis allocated for the construction of the National Cathedral will have to be taken out because that is stumbling the approval process, and the minority say they will not support that. And so that will be approved, but without the funding for the National Cathedral, the 80 million cedis.
All right. Thank you so much, Kwawu Asante, the parliamentary correspondent. Ended the marketplace. More news on our website, myjoyonline.com/business. Thanks for watching. We will be back same time tomorrow.